welcome. You're watching Countdown right here on Bloomberg Quint. It's a pretty lackluster day of trade here on the Indian bourses, with the Nifty not doing much, just a smidge in the red right now by 0.1%. We'll talk of all that and more and get you through the moving parts of the market. But before that, let's take a look at the headlines for today. Markets are trading in a range on the first day of the week. The Nifty trades around the 10,500 mark. Autos and metal stocks are with trading losses. IndusInd Bank's net profit has missed estimates in the second quarter. Asset quality remains stable, while provisions nearly double. Hindustan Unilever is amongst the top losers on the Nifty despite a 10% volume growth in the second quarter. And fuel and power leads to higher wholesale prices to come in at 5.13% for the month of September. Good afternoon, Neeraj. Just a pretty lackluster day of trade this morning. It's in a narrow band and a sort of thin on the market breadth as well.
And very thin on volumes as well, Devina. Yeah. You're right. Good afternoon. And good afternoon, viewers. Thanks for tuning in. It is a bit of a placid day compared to what we've seen in the recent past. The Nifty should come up on your screen, and you can see the only bout of activity that happened, at least on the grain side, was when the index tried to bounce around a bit. That got quickly sold into as well. IndusInd Bank results, of course, came around this time too. Not that notwithstanding. But yeah, lying absolutely flat. The Nifty bank to about 0.5%. So it's been gyrating between this 0.3% to 0.8% kind of a range. There you can see it was down about 0.8% at a point of time, went up a little bit, and now back to down about 0.5% kind of a loss for the Nifty Bank too. The volumes will come up on your screen. At about noon, we had done sub 16,000 crores on the cash side. And even right now, at about 2 p.m., just about 19,000 crores on the cash, and the NSE FN about 5 lakh crores. Suffice to say, this will go down as a subpar day on the average volumes for at least from today's session perspective. Bring up the heat map and see what's moving and what's not. IndusInd Bank will also be in focus, but HUL clearly the one that has taken the stick, 3.5% down. Autos and financials, all of which went up in Friday's session. Some of them are coming back. So Maruti, Mahindra & Mahindra and the others have come off a bit. IndusInd Bank reacting to those results and the slight miss. So about 2% lower because of ad hoc provisioning. I think that's the analysis, but IndusInd Bank corrects a little bit in the session today. And amongst the gainers, it's IT and pharma, predominantly pharma. So Dr. Reddy's, Lupin, Cipla are amongst the names which have done well. But giving company are stocks like Infi, Wipro, as well as HCL Technologies, the big boy Reliance Industries too, margining the green. But even Stevens on the market breadth on the large caps. What about the mid caps, Devina?
For the mid-caps, Neeraj, it's the sugar pocket that seems to be dominating in trade, and even some of the mid-cap IT names are buzzing around, along with pharma names like a Natco Pharma, Biocon. But we'll come to that in a bit. I want to just quickly highlight those pockets and the kind of pricing activity we are seeing on each of these names. So in the sugar pocket, you've got the stock like Dwarikesh Sugar, Balrampur Chini, Dhampur Sugar, be it Sri Renuka. All of these stocks have given you, Bajaj Hindustan, all of these stocks have given you gains in today's session, closer to about 7 to 8% in the trade. In IT, you've got the mid-cap IT names, specific gains coming in across the board. A stock like Aptech has moved up 14% on the back of good volumes. Emphasis has moved up about 5.5 to 6 or 5.5 odd percent, and KPIT Tech is the other one that moves up closer to about 6.5%. Another stock like an HCL Infosystems also does well, about 5.5 odd percent higher there. Among specific stocks on the back of heavy volumes, Den Networks has moved up 10 odd percent. The stock's trading about 10 lakh shares, which is actually a 200% uptick in the kind of volumes that you're seeing on the stock. Avanti Feeds is the other one. 11.4 lakh shares have been traded, and Natco Pharma trades with gains of about 6.5%, and the overall volumes are traded closer to about 5 lakh shares. Among specific losers, you have an Avenue Supermarts, which has seen some amount of pressure there on the back of its results and the margin pressure that we've seen in the numbers. The stock's down about 5.5 odd percent, and Divan Housing Finance is the other one, which loses about 5.5 odd percent in trade today in terms of the meaningful losses that we're seeing. But let's quickly run through what's been happening in the futures and options space. Darshan is joining in for that. Darshan, good afternoon.
Good afternoon, Devina. It's range bound for the Nifty at least. It's moving in a very, very narrow range in and around between the 10,400 to 10,500 mark in trade. What we've seen is that the Bank Nifty has taken a cut, but it's still recovered from the lows of the day, but that's seeing much higher open interest build up. Now pull up where open interest build-up is seen, and you can clearly see that from 10,500 to higher levels, call writers are much more active in trade. So that's this is the total open interest. 50 lakh shares is the total open interest on the 11,000 call, which means that's the resistance. The first resistance obviously will be 10,500. It's evenly divided. If you see below 10,500, the red lines are much more prominent, and if you see above 10,500, you see the green lines are prominent. So that's a range that the market has taken for itself at this point of time. If you take a look at what's happened in trade today and where positions are being built, you can clearly see that call writers are very, very active in trade from levels of 10,600 to higher levels. Put writers have taken massive positions in the 10,400 mark in trade because they expect support at least to come in from that level today. Some of the important stocks that wanted to highlight and that are moving in trade today, Exide for one is seeing high open interest build up of 15% on the long side. It's been a marked outperformer after in the auto index. Kotak Mahindra Bank has managed to move. It hasn't moved up, but look at the open interest build up, 10% on a Nifty stock. That's decent. So there is a lot of accumulation that is happening. Dewan Housing, again, fresh short positions are taken on the counter. It's down to 275, and Ajanta Pharma is seeing decent open interest build up on the long side on the pharma space.
Okay, Darshan, thanks a lot for that. That's the futures and options wrap up in terms of what we're doing currently. Before we actually move on, I just want to highlight a few other variables. One being the currency, which is now trading at about 74. It probably made that mark sometime earlier today, and it's perched at about 74. The broader market breadth is slightly better off, so 1:2 in favor of the advances. And in terms of the turnover that Neeraj highlighted earlier on, it seems like a pretty dull day, not too much of activity, just closer to 5 odd lakhs in terms of the NSE futures and options.
Yeah, well, let's get in a global voice. It's the start of the week, and we get you somebody who, well, actually invests or looks at India. Indian investments specifically as well, and also looks at investments world over. Manish Singh of Crossbridge Capital with us on the show. Manish, good having you. Thank you so much for taking the time out and speaking to us at Bloomberg Quint India. I was looking at some of the things that you've said in the past and how there are waves in investing. Now, I want to kind of broaden this umbrella of waves to whether the next 6 to 9 to 12 odd months augur well for investing in the US stocks and select developed economy stocks versus investing in the EM stocks. Is that a reasonable argument to make?
I think it's a very reasonable argument, and a couple of reasons for that is you are coming towards an end of an economic cycle, so to say, in the US, and which is why you are seeing the US interest rates are increasing as well. The overhang of US interest rate increase, and of late, the whole fear that oil prices may go higher again, given the weekend news that we have heard about Saudi Arabia saying that they're going to respond to any sanctions with even bigger response on their side. That does cause me some worry about EM. So therefore, one has to be careful. Again, as I said, this is only for short-term thing. From medium to long-term, there is no alternative. I mean, EM is the one market that gives you growth. EM is the market where you're going to see robust growth, so to say. So for now, yes, I think US equities or developed market equities, and I would specifically say only US equities, not Europe, because Europe has its own issues. That gives you a better safe harbor than being everywhere in every stock market. Yeah.
EMs and a select set of EMs, Manish, have underperformed quite a bit in the last 3 months. In some cases, even YTD. Do you think there is still more downside?
Mm-hmm. Well, I think more downside in the sense that I think I'm really concerned about this whole oil and Saudi Arabia story. And U.S. has said the Saudi ambassador to U.S. to come back by Tuesday and present the findings to say what happened. If the ante is up, and Saudi Arabia is not going to back down from what we have seen, clearly because they see they have a strong hand. U.S. imports 1 million barrel oil per day. U.S. is going after Iran sanctions. U.S. doesn't have friendly relations with Russia. So who's going to influence this to continue providing the oil? And if Saudi Arabia and other markets, they use this as a basis and the oil price skyrockets, that is a big problem for emerging markets. Not necessarily purely in terms of dollar flow, but how the sentiment itself changes. And what we have seen lately, that it's sentiment, psychology, positioning, these have become a bigger factor as we are heading towards the end of the cycle in US and US rates increase. So that worries me in the short term. I mean, of course, we don't know, and I can't guess, what's going to happen or what the ambassador is going to say and how US is going to react to it. But I would say that as investors, you have to keep that in mind, that these things could have an impact at this stage.
Manish, good afternoon to you. Recently, a survey done of about 26 traders, strategists, said that the emerging market route probably could be seeing a turning point, specific to a country like Mexico, where the worst could be behind us. However, not the same can be said about a country like Turkey, or for that matter, Argentina. Where does India stack up in this list, according to you? I mean, do you see this sell-off having a turnaround?
Well, I mean, India is a very attractive destination, and purely for the reasons we know in terms of the size of the economy, the growth we are experiencing, and what seems like a stable government with policy, to keep bringing inflation down. So from a medium to long-term point of view, it's very difficult for anyone to be bearish on the India story. And but again, given that the stage we are in, I echo your sentiments about I'm not as positive on Turkey as I think the market is. I do see that the Mexico story clearly has been positive, because now you have this new deal, USMCA, that the US has signed to replace NAFTA, that clearly gives Mexico a good boost, because people were concerned that the auto exports from Mexico could fall, and that would be bad for the economy. So I think that's definitely a positive story. India does not come into that. India is definitely more a story about its own internal growth, its own internal politics, its own internal, and of course, oil price. So every conversation that people are having, it's depend on, so where does Indian rupee go from here? That becomes a major factor. However, I mean, that overhang will continue as more and more domestic investors, they keep investing in the market. And the banks, they keep providing the credit facility that the businesses need, and there's a stable government in place, then you should be fine. And so, and I do think that these things does exist in place for India, but like any other market, it gets started with the same thing. So anything happens in EM, there you go, sell everything, and then EM, India is big part of that basket, so India gets sold off as well. I don't think that should really be the case for India, but you can't escape that given we are part of the EM basket.
The other factor, obviously, that everyone is rather keeping an eye out on is crude prices, and you did mention that. There was a recent IEA report that suggested global oil demand is expected to set record highs, and it forecasts a growth of 1 to 2 million barrels per day every year growth till at least 2023. Now, with these sanctions coming in, there is expected to be a little bit of that vacuum or a little suck out of the kind of demand, supply that there is. So in light of that, is that $100 per $95 to $100 per barrel inevitable?
I wouldn't say inevitable, because the politics is very fluid and it does change very quickly. However, I do see the risk to the upside. I definitely see the risk to the upside. Remember that oil is not a commodity which is in short supply. It's just that the cartel, the way it works, OPEC and other bodies, they make it a case of short supply. So unless there is a fear that there's going to be a big supply coming from America or somewhere, because remember, America has a lot of strategic reserves, which it could open and bring the oil price down. But then it depends on who wants to fight this war and for how long, because they do not want to use the strategic reserves if it's just to keep the oil price down for a short time. So it does strengthen the hand of other players, in this case Russia and Iran and Saudi Arabia. So at this moment, I think it's difficult to predict, but on balance, the risk for oil price is definitely to go higher. And we are also, remember, we are also heading into winter months where the fuel consumption is higher in US. And so I would say that the risk on balance, to me, it's on the upside. Now, if US and Saudi Arabia and others can crash a deal and to prevent oil from rising, that will be great, because it will be in US interest as well. But we will see. On balance, my view is that oil price definitely is going to stay where it is or go higher.
All right, Manish, we'll leave it at that. Pleasure chatting with you. Thanks so very much for joining us. That's Mr. Ramesh Sopti there addressing on the back of IndusInd's numbers. Let's cut in.
So let me take you through and then we'll take questions. So as quarters go, I think this was an eventful sort of quarter, both on the macros and the financial stability risks. Also, I think on the operating environment. So just to give you a sort of my sensing of what's happening, I think on the macros, we are certainly seeing financial stability risks more intensified. That's caused by the fact that there was a severe depreciation of the rupee on the one side, and I think also that the other fallout was the liquidity stress that we saw in the market. Accompanying that was also the scare that was created in the NBFC market, and therefore the whole issue of questioning of the asset liability management of NBFCs came into fore. And of course, there was the overhang of a particular infrastructure company, which everybody has talked and written about, and we'll also speak about later in this presentation. So I think in this environment also, our headline results are pretty satisfying for us. So whether it is top line on the revenue, net interest income grew by almost 21%. Our core fee income grew 20%. Our deposits grew by 19%, and our loan book grew by 32%. And within the loan book, we have a growth of 35% in the corporate book and 29% in the retail book. So I think loan book growth has been pretty secular. One of the big chunks on our retail growth is vehicle finance. That is chugging along at a pretty robust pace. We've seen a growth of disbursements grew 40% on our vehicle finance book, and the book grew by 30%. This thing, and it's pretty secular across all segments. Of course, CVs stand out. CVs grew by 44% in terms of disbursements. So accompanying that on the balance sheet side, we also see good handsome growth on CASA, as well as the savings bank, which grew by 27%. So top line growth all around is pretty good. Cost to income ratio actually fell during the quarter, and it's closer to 43% than the 44% it was there last quarter, and that's a consequence of the initiatives we've taken on digitization and standardization and centralization of our operations, and also the rationalization of our branch network. And therefore, in the normal course of business, our profit after tax would have grown by 25%. And if you look at the core profit growth actually during the quarter was 35%. The actual profit growth, as you see it, is 5% because we have made a prudential and preemptive a provision. It's called a contingency provision on a particular asset which is standard. And if you see that in the notes, that is the explanatory note that is given in the SEBI results, that will explain what that actually means. It means that there's a lot of speculation in the market about exposures to that infrastructure company. As far as we are concerned, our exposures are standard, and interest has been met and repayments have been met. But since there is a resolution plan which is now underway, and we hope that that will come out by end of the month to turn the company around. Because of the uncertainty around it, we have chosen voluntarily to make a contingent provision of 275 crores. The contingent provision is not specific to, is not a specific provision, and therefore it can be clawed back, and if things do not go the way we anticipate them to go. So as a consequence of that, PAT growth is subdued at 5%. But if you ignore the contingent provision, then I think the growth is at 25%. The other main feature is the quality of the book. So you've seen our gross NPAs declined, our net NPAs declined, our credit cost moved down to 12 basis points, which means that on an annualized basis, 48 basis points. Last year we were at 62 basis points. So quality of the book has certainly improved. The gross NPA plus restructured book is flat at 1.2%, and our security receipts book, which is what we call the asset sales, asset reconstruction sales, is 3 basis points. So I think there's been overall a good improvement in the quality of the book. The other features are that the branch network expanded pretty handsomely. 56 new branches were opened during this quarter, and we went to a total of 1466. We are on track, according to us, to hit the figure of 2,000 branches that we were planning for March of 2020. Other than that, I think there have been a lot of new digital initiatives. You would have seen we've launched first of its kind the credit card in the market. It's called the Duo. It's a debit and credit card combined in one card. So 2 chips and a debit and credit card. So there's a campaign going on now. And also we've started the Alexa voice recognition process, which we are now rolling out to clients, where you can actually give your instructions on a voice basis rather than the other way that we're talking. So the business as usual has gone off quite decently. A one-off provision has been made as a safety measure and a precautionary measure. And that's why the PAT was actually depressed and the growth came to 5%. But the underlying growth is very clear. It's continued to grow at 25%. So that's a summary. Anything else to be added? Right? We're happy to open the questions. No, so it's like this, the total exposure and all, you can compute yourself. No. It's a, there is a judgmental element to it. It's what we think could be the worst case, but it could not even get to that place. Right? We could not even have to do this much, because our exposures are against very specific cash flows, and they identified cash flows and identified special purpose vehicles. We do not expect to take hits on that, but let's wait for the resolution plan, and once that is out, we will know whether the potential exposure that we actually laid out was enough or more.
What is the total exposure?
Exposure is not to be disclosed. We've disclosed the provision for it. So we had the option of disclosing exposure and not making a provision.
So today you heard the NCLAT ruling as well, moratorium has, the NCLT ruling is being put on a standstill. What is the resolution that you are expecting as one of the creditors that has an exposure in the country?
No, I think what they had sought was that instead of fighting 50 or 60 or 70 such cases all around the country, which will distract the resolution plan, a moratorium is placed so that a breathing time is available, and the resolution plan comes out uninterrupted without any distractions. That is the only purpose of this thing. It's not a moratorium on your NPAs and things like that. It's a moratorium on claims to be made on this thing.
So by when do you expect your deal going through with IL&FS Securities? Given you've already received all the regulatory approvals.
IL&FS.
IL&FS.
It's called, yes, it's called ISSL. It's all regulatory approvals came just before the end of September. I think they have to go through their inner processes to revalidate the transaction. We are very confident that it will go through, and we are determined that we should go ahead with the purchase. Can't put a time frame to it, but it should happen sooner than later.
Is there any concern as far as acquisition is concerned?
No. not from our end.
Okay, because since it's a subsidiary of IMFS and given the crisis that the company is
No, but this is a standalone subsidiary. It is a very specialized sort of a subsidiary. It fills the gap that we have in our product suite. We are very keen to complete that. We are in constant interaction with the company, and we, as I said, we hope that this will be concluded sooner than later.
Is there a concern in the industry as far as lending to the NBFCs or buying the portfolios is concerned? Because that has been the highlight over the last month. So could you throw some light for your bank as well as the industry?
See, we have done a review of our exposures to the NBFC, and we've also seen the asset liability profiles of these NBFCs, and we feel comfortable. And as far as we are concerned, there is no moratorium on lending to NBFCs. All we did was to just take stock of how these companies were performing and how well they were matched on their asset and liability profile, and therefore we continue apace. That presentation we have made to our board, and we are pretty satisfied that we have the right companies on our books. So there is no moratorium as far as we are concerned. I think most banks would have gone through a process, similar process, that let's take stock, right? And so focus has now suddenly come to this whole way of how they are funding their books, right? Are they funding short and lending long, which is a classical mismatch, this thing. Now banks have a much more rigorous liquidity management sort of profile and platform. So, we have overnight, 2 days, 7 days, 14 days, it goes like this. And I would imagine that, and there are some hints which have come from RBI also, that ALM, I think processes will probably be tightened for NBFCs as well, which is rightfully so, because if you have a liquidity square of the type you saw, this thing, it could really cause a run in the market, which is not desirable at all.
All right, that's the management at IndusInd Bank highlighting the numbers. Pretty pleased with the performance, at least with regards to the loan growth and the coming off of the gross and the net NPAs. Also talking about the 275 crores contingent provisioning that they have taken against exposure to IMFS. That's IndusInd Bank, which is down about 2.5%. 1607 is where the stock's trading at. Other stocks on the index, just to highlight the kind of moves we're seeing right now. So HUL continues to be one of the key laggards on the index at 1516. The stock's down about 3.5%, and that's been pretty much perched out there since the start of the trading day. Hemen is the other one that's the top loser on the Nifty. It's down 3.5%. Bajaj Finserv, after Friday's move, has seen a little bit of a turnaround in terms of the move there, so 3% cut. HPCL is down 3%. You've got GAIL, Ultratech Cement, Nisha Motors, which loses about 2.5%. Amongst the gainers then are Dr. Reddy's, Cipla, Lupin. So your top three gainers are all from the pharma space, about 3.5% higher. IT as a pack is doing okay. So HCL Tech, Infosys, Wipro, TCS, all of them gaining back anywhere from 1 to 1.5% apiece.
The stock to my mind has to be Avenue Supermarts, and that continues to grind lower, about 5.5%. We'll talk about that a bit later on in the show. Some result boys today, companies that have results today, Trident, TV18 and Delta Corp are three names from the mid-cap end of the market. Trident seeing a sharp uptick. I haven't seen those numbers on the screen as yet, but maybe they did come about because the stock has seen a bit of a sharp uptick there. So that's an interesting one. Just before we get in our guests, Trident seems to be on the move, 10% higher, and a sharp reaction in the last few minutes of trade. Yes, indeed, outcome of board meeting. Let me just try and see what the results are looking like from Trident. But clearly, this company that is slated to come out with numbers today should have been out. Delta Corp is the other one that is slated to come out with numbers. Let's wait and watch if those numbers are out as well or no. Anyways, we'll just wait for that to come about and then talk more. In the meanwhile, let's get in Shagata Bhattacharya to talk about the macro data that came out. 2 or 3 numbers post-Friday. We had the CPI, IP, today the WPI. Shagata Bhattacharya with us. Good having you, Shagata. Thanks so much for joining in. Reading too much into the CPI dip and the WPI uptick, or it is a monthly data that could change month ahead?
Yeah, I think, one data point itself will not establish a trend. But what is a little worrying is that the WPI came in higher than our expectations and the CPI came in lower than our expectations. So, I mean, I'm not very sure how to read this. I mean, going forward, need to look at the details much more carefully and need to look at the leads and lags. But the worry is that the higher than expected WPI print shows that input inflation is increasing, although the higher than expected numbers came in even from food, also from manufactureds, which seems to suggest that some part of the rising fuel costs, etc., seems to be feeding into input inflation for manufacturers. How and when and if at all, I mean, this translates into CPI inflation, of course, needs to be looked at carefully, but some calls for some caution, yes.
About inflation, rural food inflation, that's been coming off, and this time around, I think in the wholesale price index, you saw food articles at a negative 0.21%.
Yes, I agree that, I mean, it is food inflation which has kept overall headline inflation in check till now. But again, and it doesn't really look as if it's likely to rise very sharply or rise at all in the near future. We are hearing stories about for the Kharif crops, the MSPs being much, much higher than what is actually being realized in the markets, in the mandis. So it does suggest that there is overcapacity, overproduction. But again, I mean, as and when the non-mandated foods, I mean, the MSPs that the government has put in place, how much of the source agencies will probably source from this is likely to have a bearing on the inflation prints, food inflation prints going forward.
What does that do in terms of, we've seen how the RBI has been tackling inflation and the stance that they've taken purely on the back of inflation prints. Going forward into the next few months, what is your anticipation of the trend for inflation and thereabout RBI's reaction to the same?
So again, as of now, from various indicators that we are seeing in markets, in terms of capacities, in terms of possible productions, in terms of actual demand in the system, our sense is that inflation will still remain largely contained. I don't see fuel inflation feeding in very sharply into core CPI inflation. WPI might be a little higher. WPI is likely to rise from here on. CPI headline and CPI core are likely to fall from here on. So our sense is that as of now, given what we understand on economic activity, it's not likely to be that big a problem. In fact, it is likely to be moderate enough to allow the RBI to hold on rate hikes for the time being at least. Our expectation that even in the December policy, they are probably not going to move on rates. If, as we expect, that the rupee is more or less topped out at these levels, it might rise a little bit more, but not too much. If that view is correct, which is a big if, then I think, the rates are more or less under control.
Got that. So, Agatha, we'll leave it at that. Thanks for that quick update in your opinion on the inflation print numbers, WPI inflation as well as CPI inflation that came out on Friday. Sumeet, Bagadia of choice.
Dana, just a second. Just before I get to Sumeet, though, just Trident, the numbers are out and just want to mark them. So the standalone numbers as I see them on the exchange, the stock has shot up about 17%, but just trying, the standalone numbers, 1391 crores for the September quarter versus 1120 crores. And the net profit has jumped up to 109 versus 50.9 crores. But keep in mind that there is a forex gain of 55 crores versus almost negligible, the impact out there on a comparable basis. So there is a large forex gain element that has led to these numbers looking good. The stock is up 17%, yes, but just do mind that on a standalone basis at least, the profits are propped up because of a large forex gain element, without which the numbers or the bottom line numbers would not have looked as good. The top line numbers at 1391 versus 1120 crores, that's well about a 15% gain, I would presume 15 or 18% gain. So that's okay. That's par for the course. But the bottom numbers have that prop up. The stock, however, 18% higher, 5 million shares traded. Not a bad quarter.
Well, the stocks definitely reacted in the positive. 68 on Trident. But let's bring in Sumeet Bagadia and Hemen Kapadia, both of them joining us right now. We'll have Chokkalingam also joining us in just a few moments. But, oh, he's already here with us. I'll start off with Sumeet first on the index. And, you know, what could possibly be the trade here? Today seems to be a slightly more flattish, more lackluster trade in terms of the Nifty moves. Will that prompt you to take a positional trade here because of the lack of volatility that you see here?
Hi, good afternoon. Well, yes, you are absolutely right. Today we have seen a range-bound move and a lackluster day. But now, looking at the chart, it seems that till the time 10,400 levels are not taken away on downside, it's better to be on buy side. The overall range for Nifty is placed between 10,300 levels on lower side to 10,700 on higher side. Now, at present, Nifty is quoting at around 10,470, 480 levels. I think for a trading perspective, these are good levels to initiate long positions with a strict stop loss to be placed at 10,400 levels on lower side, and on higher side, once the Nifty is able to break 10,500 convincingly on closing basis, then we will see a move till 10,600 or 10,650 levels in next couple of days. So for a trading perspective, one should initiate long positions with a stop loss to be placed at 10,400 levels on lower side for the upside target of 10,600 and 10,650 levels in next couple of days.
Hemen, what about your call on the index? I mean, last time we spoke, we were still anticipating the bounce to come back into the markets.
Finally, it came.
Yeah.
It did. But anyways, I guess the bounce is not yet over yet. The VIX has come off. I think last week when I was here, Devina, VIX was 21.76. We've come off to 18.73. I think it's obviously not going to happen in a day or two, but it comes down below 17. Then chances of the Nifty going to 10,700 increase. I would be more bullish on the Bank Nifty than the Nifty, but I guess sometimes this one leads, sometimes the other one leads. About 25,450, I think Bank Nifty is heading to 25,800, and I wouldn't be surprised if it goes to 26,100. So outlook is positive. I would go long on most of the things. I have a simple vanilla sell call on the Nifty 10,200, 10,000 next month put option, Devina. So I think 10,200 doesn't look like breaking. So 10,000 is safe, out of the money, just sell the put, or you can go long in Bank Nifty futures about 25,450.
All right, that's on the Bank Nifty and the Nifty there. We're talking about put options. Chokka, good afternoon to you. What's the call? What are you telling your clients to do at this point? Is it time for some value buys at lower levels?
Yeah, certainly. We have been telling our client not to expect to make money in 2018. We have been reiterating that 2018 would remain as a year of investment. Only in 19 we can make money. I believe volatility would continue with possibly downward bias. We are now investing again quite aggressively in the mid-cap space because overall market cap is down more than 20 lakh crore, out of which the small and mid-cap segment alone is down by about 15 to 16 lakh crore. So I don't think there can be another meltdown in this space. So therefore, every fall we are accumulating good quality mid and small cap stocks.
Okay, let's get some stock ideas out of the way first, and then we'll talk in more depth about what's been happening to the structure of the market. But let's take some strategies from Sumeet. Sumeet, your stock ideas are on Lupin and LIC Housing.
Yes, absolutely right. The first one is from pharma space, that is Lupin. Most of the pharma stocks are looking good to me, and we feel that Lupin can give a good move from present levels. The stock has taken support, and today we are seeing a good upside move in Lupin, which says that the stock can move up till 910 or even till 930 levels in next couple of days. So for a trading perspective, one should initiate long positions in Lupin at the current market price with a strict stop loss to be placed at 850 on lower side for the upside target of 910 and 930 levels. The second stock for the day is LIC Housing Finance. After a correction, it seems that in last couple of days, LIC Housing Finance has made some bottom and taken some support at low levels. From here on, we can see a move till 470 or 480 levels. That would be the pullback move. Once the stock is able to break 480 on closing basis, and that too with volumes, then we can see move till 525 levels in next couple of weeks. Now immediately for a trading perspective, one can initiate long positions with a strict stop loss to be placed at 430 levels on lower side for the upside target of 470 and 480 levels.
Okay, that's on LIC Housing and on Lupin. Hemen, you want to run through some of your ideas as well. You've got a buy on Sun TV and Escorts. Why do you like these two?
Yeah, Escorts, they've now oversold. Higher tops, higher bottoms. Crossover buys on the MACD and stochastic on the daily chart. We are due and overdue for a bounce, upward key reversal on the weekly chart coming in last week. So buy in Escorts at around 594, stop loss 586, target 610. The Sun TV figures I would need to tweak just a wee bit. It's come off a bit. Sun TV is 645, so I would have a buy in Sun TV at around 644, stop loss 636, target 661. Once again, a rounding bottom. Upward key reversal on the weekly chart, crossover buys on the daily chart. Above 660, the stock would give a mini breakout.
Okay, so a couple of ideas from Hemen Kapadia as well. Pharma on a bit of a roll today, so keep those stocks at the back of your mind. Some more ideas coming up in a bit, but a couple of pockets of conversations. Mr. Chokkalingam, HUL, the downtick today following those numbers. What do you make of the move? And what should an average investor do in HUL now?
Average investors, if they are defensive, they can use this opportunity to buy. If they are holding it, they can hold it. Because 10% volume growth is quite impressive in this environment. And there has been some margin contraction, but I believe it is most unlikely that oil price would shoot up beyond $84, $85 because across the world, the growth is correcting. And so therefore, and also, the HULP has come down a lot after the recent correction. So therefore, I would suggest hold or buy for defensive investors. Okay.
The other pocket of interest, Mr. Chokkalingam, today at the broader end of the spectrum is the sugar pack. Now, do you get a sense that the move this time around could be backed by fundamental reasons, namely the ethanol focus that this government seems to have, and is that strong enough to let investors who put money to work right now in any of the sugar names make some money over the next 6 to 9 to 12 odd months?
I doubt whether the sugar pack can sustain the rally because when the next crushing season starts in October, it is projected that again India will have a excellent output. So it is going to be difficult to make money. Unlike Brazil, in India the ethanol is a byproduct. Only in Brazil they have either sugar or ethanol. That is the way the plants are structured. But in India, ethanol is always a byproduct through molasses, which means the sugar would still remain as a core business model. So only one or two companies where they already diversified into co-generation of power and substantial integration towards ethanol, probably they can make money. But otherwise, 2/3 of the sugar companies once again would correct. So I would suggest be careful in choosing the stock. Only the diversified within the sugar or across the businesses one should choose. Otherwise, one should use this opportunity only for trading purposes.
Okay, that's the sugar pocket. Sumeet, anything that particularly interests you within this space? Maybe not just pure play sugar, but a counter like a Praj Industries as well?
Well, yes, see, Praj is looking good to me. In fact, this stock has given a very good move from lower levels. Now, immediately, it has taken up with the resistance of around 120. If today the closing is seen above 120 levels, then we can see a move till 130 levels. Now, that would be the immediate target. Once 130 is taken away convincingly, in longer term time horizon, we can see a move till 150 levels. I think those who have taken long positions at lower levels, they can hold on their existing long positions. And if anyone wants to initiate a fresh long position, then if there is any dip seen from present levels, then that should be used as a buying opportunity. Any dip till 115, 114 levels should be used as buying opportunity. A closing above 120 will take stock prices to 130. That would be the immediate target. And above 130 in longer term time horizon, we can see move till 150 levels also.
Okay. What else? Just looking at select set of names and some recommendations that I think Mr. Chokkalingam has as well. We're looking at results that have come out. By the way, Trident, I just stand corrected. The 55 crores that we were talking about is actually a forex loss. So despite that, if the stock of the company has managed to clock in a profit of 108 crores versus 50 crores, that speaks about the kind of EBITDA or operational metrics that have come into play as well. And as a result of that, The stock is staying up about 17 odd percent. It's turned out to be a robust quarter for Trident. Could we extrapolate this to some of the other names? And let's pull up maybe a Welspun, for example, and try and see if that company, Welspun India, and try and see if that company's had some gains as well. This 6.5%, I think, on the back of Trident's numbers, because if Trident has done well, you would probably reckon that Welspun India too could have a good one. Mr. Chokkalingam, do you track some of these terry towel exporters? And this Trident numbers, a doubling of profit to 108 crores despite a forex loss, and revenues up about 18-19%. That's not a mean number. It's a fairly above average number.
Yeah, definitely, it's a good performance. In fact, it was expected from many of these textile players because there has been a significant increase in the export of the textile products, including yarn and terry products, as well as because of rupee depreciation, there are some improvements in the realizations. So one should hold on, but being a little conservative, I will not chase to buy the stock, but certainly those who are holding it can hold Trident. In fact, other textile stocks also most likely to come out with the good results. So the textile stocks which are not participating in the rally, one can buy.
Okay. Chokka, let's go and run through your list of stocks that you're liking. Let's start off first with your call on Karnataka Bank. Karnataka Bank recently reported its numbers as well, but what is making you like the stock?
Yeah, before that, I just want to disclose that personally also I have invested. The reason is one, despite industry credit growth of 13%, this small regional bank is growing its credit in a strong double digit at around 20-21% till recently. And the net NPA is less than what Axis Bank and ICICI Bank have reported. It is able to control the net NPA at around 3%. And most importantly, the stock is available at a 20% discount to adjusted book value. This kind of steep discount to old private sector banks I have seen, sometime in 2002 to 2004. After that, we are seeing this kind of discount. That's because of a lot of pessimism in, some of the banking segments. But I think Karnataka Bank is quite unique. It has been expanding penetration of technologies and branches. And so I firmly believe that in the next 2-3 years, it can even possibly become a multi-bagger. But right now, for 1 to 2 years, I have a target of around 150 rupees.
Okay, that's 150 rupees price target for Karnataka Bank. The other one that you like is a Datamatics. Obviously, rupee depreciation auguring well since it's a primary export-driven company. But is that the only reason you're liking it, or there's something else that adds up?
Yeah, this is into IT services as well as business process work. And most of these stocks, if you see, they trade at around 1.5 to 2 times enterprise value to annual sales, whereas this is at a discount to sales. It is about 10% discount to annual sales if you take its enterprise value. Stock is also down by about 25% from the 52-week high. And as usual, strong balance sheet, net cash company. And it is also engaged in the engineering, it caters to engineering companies for the IT needs. And also, it has come out with excellent results for June quarter. In September quarter also, I am expecting a strong double-digit profit growth. And it has got a lot of clientele from Fortune 500 list. So all these points augur well. As you also mentioned, it's also quite a safe stock when the rupee is under tremendous pressure. So therefore, I believe that it can achieve easily the target of anywhere around 150 to 160 rupees.
All right, that's Datamatics. Pull up an Avenue Supermarts. The stock's been down about 5.5%. Disappointing numbers, at least on the margins front. There's 180 basis points dip on the margins, came in at 14.3 odd percent. Stocks at 1336. Is there a trading play here, Hemen?
It would be a sell-on bounce. I have a feeling, Devina, that 1282 has seen the stock give a recovery. We are in a very clear intermediate downtrend. In fact, the monthly MACD is giving a sell, so if it's a short-term trade, it would be positive. But from a positional point of view, I think it's a sell-on bounce at least for the next month or two. We have entered an intermediate uptrend, probably a correction of a greater degree for the first time since we got listed. So I would be reticent about giving a buy call. Having said that, we are at 1337. The bounce might not yet be over. We might still go to 1440, but still remain the sell there.
It's interesting to see what some of the brokerages had to say post the numbers and just the broad brush numbers as well that came out. So I think that highlight, at least to my mind, was that the gross margins have dipped about 180 basis points. And it's a conscious decision by the management, but if Avenue Supermarts, in order to maintain revenue growth and give preference to revenue growth, has had to sacrifice margins, and it may not be a one-quarter phenomenon, and therefore does it continue to impact profitability for Avenue Supermarts in the quarters ahead? And therefore, does that continue to weigh in on the stock would be a key question.
And what does it do to valuations as well? I mean, it's any which way is trading at steep valuations. I think about currently for FY20 estimates closer to 58 to 62 times, though you have a few brokerages which are keeping an estimate of about 50 times for
on the target.
Yeah, on the target, 50 times for Avenue Supermarts. But then again, how much room does that leave for any disappointment of numbers in the next few quarters to come? The management has consciously said, and even their recent analyst meet, they said that they are going to go in for price competitiveness versus the kind of growth projections that they have. So they are going to be focusing, margins. So if that's a conscious decision, where does that take them in terms of the overall?
Well, it's showing in the way the stock has reacted today and the volumes too. I think they should pull up the AVAT function on Avenue Supermarts and just see what the volumes are today. My guess is that at 1.8 million shares, the volumes would be higher than what the average volumes have been for Avenue Supermarts in the last 20 days, or it's substantially higher than what the average volumes are. So for a stock which doesn't get traded that often, this is high volumes, but I think, as Devina summed it up, the valuations, which have always been a concern, left little margin for error. The fact that they have come off with some bit of margin erosion and a conscious decision at that could be weighing in on the stock. Mr. Chokkalingam, a lot of people would have found Avenue Supermarts expensive at 1550, 1600. That business model hasn't changed too much, but for the margin pressure that we've seen, this 300-point correction that we've seen in Avenue Supermarts thus far, do you reckon that there could be more, or would you be comfortable starting to invest a little bit in this name? Expensive as it is a quality franchise.
Yeah, no doubt it's a quality franchise, but still I would not buy at this level. I would expect more correction to enter the stock because, the whole trading business model is undergoing a structural change. In the sense, a lot of e-commerce players are coming and making a consumer as a king by cutting down the margin. So I don't think this business model can keep improving the margin going ahead. And this kind of valuation also very stretched. So I would expect at least a 10-15% correction. If at all, I would have to recommend to my clients.
By the way, look at pharma. Nifty Pharma should be up and about. All the large cap pharma names have done really well. Lupin is up 4.5%, Reddy's 4%, Cipla about 4%. Strong names out there, strong moves out there, and Natco Pharma has some fundamental reasons for doing what it is doing. That stock too has done very well. Hemen, I don't know if you've already commented on large cap pharma. I'll add a Natco too out there. These 3 or 4 charts, if you look at them, Cipla, a Lupin, Dr. Reddy, and a Natco Pharma more importantly. If you look up these charts, do any of them give you a trading opportunity?
Trading, yes. I think Dr. Reddy that you spoke about, Neeraj, I think it's given a mini breakout of sorts. So I think that is where we could see some upside coming in. But basically from a longer term point of view, pharma looks great for a couple of years. Natco, I'm not very sure. Maybe it's slightly illiquid from that. And we've opened with a gap. And we've gone up from 635 to 734 in just 5 trading sessions. I'm not sure if the risk reward ratio is favorable after almost a 100-point move, Neeraj.
Okay, that's on Natco Pharma. Stocks currently up 6.5% at 721. Well, the next stock in focus is CESC. A year after Sanjeev Goenka proposed a split, to split the company to 4, promoters have finally received the nod now. But there's a slight tweak in the demerger. Instead of 4 separate entities, they're going to be splitting it up into 3. And how this individually plays up, I think for every 10 shares you hold, you'll get 6 for the retail entity, and I think 2 for the venture.
Yeah, 6 shares of 5 rupees face value for the retail entity and 2 for the venture. And I think once they get the pending clearance for separating the distribution, the power business. They'll probably go ahead and do that as well. So should be interesting. The stock was widely expected to gain quite a bit today. It gained, of course, 6% in Friday's session. Keep that at the back of your mind. So it was approaching this announcement with fair bit of gusto. But in today's session, after starting off 3% lower, has gone off. In fact, the last 7 or 8 days, it's gained about 7.87%. So it has approached this announcement with some bit of strength. But for now, looking a bit wobbly. Sumeet, for somebody who traded CESC in the morning on the long side and the chart has failed to take off, would you square the trade?
I think still there is a possibility that we might see some pullback or some upside move in the stock from present levels. No doubt from higher levels it has given a it has shown a selling pressure from high side, but now immediately looking at the chart, it seems that there is some support at around 880, 890 levels. So I think till the time these levels are not taken away, it's better to hold on the existing long positions, and there is a possibility that from here on we can see a bounce back till 930 or 940 levels.
Okay, trading play till 9:30 on CESC. The other stock and the last one that I'll ask you to, Chokka, before we let you go, is your call on Jai Bharat Maruti. You've put in a target of 450 on this one.
Yeah. I believe it's one of the most attractive value stocks in the small cap space. It's a joint venture of Maruti Suzuki, and along with the Suzuki, it is also expanding the capacities in Gujarat. And in fact, it has posted a 25% revenue growth year on year in Q2, when the car sales are actually dipped to 3%. That shows that it's able to gain market share. Basically, it caters to Maruti Suzuki for its component requirement. And strong balance sheet. As I said, they are continuously expanding the capacity in Gujarat. And the stock is, surprisingly trading at single-digit PE for the current year expected earnings. And the stock also corrected from 2-year high of about 710 rupee to current level. More than 55% correction the stock has seen. So all these factors give me a lot of comfort and confidence. So in fact, it is one of the top 5 stocks we consider as the most attractive for our clients, and we have been buying even today.
Got that. Chokka, thanks very much for joining us. Really appreciate you highlighting all those stock ideas at your end. So a lot of stocks discussed, including a Jai Bharat Maruti. Well, time for a short break here on Countdown. On the other side, we'll get you the Fab 4 stocks of the day, and at 3:15 p.m., we'll get you what dealing rooms are talking about.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise? अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but policy समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with Countdown right here on Bloomberg Quint. About 30 minutes left for the markets to shut shop. Let's pull up what the world markets are doing at this point of time. Our markets have recovered a little bit from the lows of the day, but the world markets, well, some losses are there. DAX is flat, CAC about 0.5% lower, FTSE 1/3% lower. The US market, the Dow future should come up on your screen as well, and that's about 0.5% lower. So the world market's not that supportive, not disrupted too much as well. So flattish to a marginal negative for the world markets in this session. As we speak, let's wait and watch what happens. Bring up the advanced decline ratio for our markets in the session today. Bring up the turnover as well in the session today, and just show you what the vital statistics are for our markets trade. Well, still about 1:2:1 in favor of the advances. So the market breadth is looking okay. The turnover is starting to pick up now. Last half an hour, will we see it nudge closer to 28? I doubt really. But let's wait and watch. There could be some pickup. And the NSE F&O volumes at about 6 lakh crores is not that bad. Okay, let's before we go any further, let's try and get a sense of what are the Fab 4 stocks of the day and what's made it to Yash Upadia's list. Yash, good afternoon.
Good afternoon, Neeraj. So the first stock on my list is Trident, and that one came out with an extremely good set of numbers. So their revenues, they have grown by about 24% on a year-on-year basis, coming in at just a little under 1,400 crore rupees. Margins have expanded by nearly 800 basis points, and the net profit number, that has come in at about 109 crore rupees, which is almost double of what it did in the same quarter last year. But this is on account of a forex loss that the company had in the base quarter. Natco Pharma is also in focus. It's up about 6% well, after the company informed that the US courts have passed a favorable decision in an impending case with respect to one of its drugs, Copaxone, and on account of that, it's up about 6%. Z-Learn also came out with their Q2 numbers, and they were also fairly good. Although the revenues are up almost 11.5%, EBITDA, the margins have come in at about 26.5%, which is relatively higher on a year-on-year basis, and on the back of that, we're seeing some good move there. And lastly, we're looking at Lupin. That one is up 4% after the company received a tentative US FDA approval for one of its drugs used in the treatment of schizophrenia in adults. It's a big drug, has a market size of about $3 billion according to their press release. Back to you.
All right, Yash, thanks very much for that. That's the Fab 4 stocks of the day. Dharmesh Kant of Indianivesh Securities is joining us on the show as well. Dharmesh, what are we doing today, this afternoon? Markets seem to be in a fairly tight range this afternoon.
Yeah, good afternoon. So the market is taking some breathing space today after tremendous kind of a volatility which we saw last week. My own sense is that this market should stabilize here, it would consolidate, and again the stock specific plays based on the results update will be in the swing. What we have noticed is, in spite of a good number, some selling has come into play because of the sentiments which have worsened. And it's still not the time to do the cherry picking in the full throttle. So one has to adopt a staggered approach in buying this. And the sectors which look good to me is anyway private sector banks are looking much better off, and pharma space. So these are the two spaces which we are concentrating on as a basket buy. Apart from this, stock specific plays are always on, but yeah, it's only 20-30% kind of investment which we are advising to clients to put their money on right now.
Okay, let's pull up an emphasis. The stock is pretty active in trade today, up about 6.8% from the mid-cap IT basket. 1,077 is where it's trading at. The buyback happens at 1,350 for emphasis. Hemen, what do you do with this one?
Oh, well, Devina, I think it looks more like a bounce, but yeah, tradable bounce, but it's sort of moved 9% in two trading sessions. We're at 1077. Closer to 1065 would make the risk reward ratio favorable for the 15 rupee stop loss and a 40 rupee target. Yeah, it seems like a trade, but probably on a smaller decline. The trend seems to be corrective, but we've been down for some 7 weeks in a row, Devina. Taken support at 1000 and we are bouncing back.
Okay, that's emphasis for you. The other one I want to highlight is HEG. Stock's up 1% today, but the recent past, the stock has seen big bang moves, taking it from levels of about 3,700, 3,500 to a level of 4,200 right now. Target price, obviously, by Bank of America Merrill Lynch, their report suggested that the stock could actually breach 6,700. And since then, the stock has started to make its move. Should pull up the last 7 days' performance of HEG and Graphite India also. Both these stocks have been fairly active post the Bank of America Merrill Lynch report. 7-day change of HEG is 31%. Graphite is up 20%. Dharmesh, do you track any of these two?
Sorry, Devina, I don't track any of them.
Sure. Sumeet, is there a trading play here?
Can you please repeat the name of the stocks?
HEG and Graphite India.
Right. Well, HEG has given a good move in last couple of days. We have seen that the stock has given a move of around almost 600 to 700 points. Now, looking at the chart, it seems that the some more upside can be seen from present levels, in which we can see a move till 4,500 levels. It has final resistance at around 4,500 levels. Once the stock is able to break 4,500 on closing basis, then we will see a move till 4,900 or 5,000 levels. Immediately, the targets can be 4,500 levels. One can use trailing stop losses in the existing long positions, and that can be placed somewhere at around 4,150 levels. The second stock which you asked was Graphite. The Graphite is giving move from last 4 days. Now, looking at the chart, it seems that the extended move, we can see extended move till 1,020 or 1,030 levels. So one can hold on the existing long positions with a trailing stop loss to be placed at around 930 levels.
Sumeet, for somebody who went long on a Lupin post your call, would you advise carrying home that long?
Yes, absolutely right. We would advise to carry the long positions in Lupin because it has broken the highs of swing highs of 884, 885 levels. If the closing is seen above 885, then we can see a move till 910, 930 levels. We are expecting a move of 30 to 40 points from present levels in next couple of days. So it's better to hold on the existing long positions.
Hemen, two stocks which have come out with numbers and seem to be doing rather well. One of them is Trident, the other one is TV18 on the charts.
Trident seems more like a longer term sort of a play, Neeraj. I have a feeling that we're in the process of forming a double bottom. The breakout comes in at 72. I think it looks like giving you a 25% from here over and above the 20%. Not so fast and not in one day. TV18 deeply oversold, downside appears limited. I think TV18 seems like a, clear trading buy. We are going to 42 and 45. Looks good. Longer term point of view, Trident looks great.
Volumes there for TV18 for sure. So do watch out for that. Just before I get into that banking conversation, Dharmesh, Kant, just one quick word. These numbers from Trident, and as a result of that, even Welspun India has gained about 8%. Do you track these terry towel manufacturers? And hitherto when we speak about exporters benefiting, the conversation veers around pharma and IT. We kind of forget terry towels, select auto components, which all could be gaining as well. Do you track this space?
See, I don't track it actively, but yeah, we do have a passive coverage, and the numbers have been very good. One is the orders were there in place, and secondly, the currency has benefited them. But going forward, a quarter ahead, what you will see is the input prices going up firmly because cotton prices are on the rise. So that will again play out. So I do not think this rock solid numbers which they have posted 20% plus kind of a growth will be the norm going forward. So, and currency, because I do think that's in the last leg of the upward trajectory, so it will also fizzle out. So then this will be a painful spots for all the textile manufacturers, because cotton prices and passing on to that to blended realization is very difficult, the type of competition they are facing in the US.
All right, that's Trident for you, still holding on to those gains of 19%. Well, on to some earnings then. Indiabulls Housing Finance may post a 23% jump in profits. Shraddha Bablash is joining us with the expectations and what we need to watch out for from Indiabulls Housing Finance. Shraddha.
Well, Devina, aside of the liquidity-driven issue on post-21st September, which had a which led to a big beating on the share price, as far as the Q2 numbers are concerned, there the earnings growth trajectory is expected to continue with the past trends. So net profit is seen 22% higher at 1053 crores. When it comes to the loan growth, that is expected to continue to remain strong and seen closer to about 30% levels like we have in the previous few quarters. Asset quality is expected to remain largely stable, but spreads were expected to moderate given the compression that we have seen in the mortgage spreads, and additionally they also have a higher increasing share of the relatively lower margin home loans in their portfolio, so that could weigh on the margins. But having said that, two key things to watch out for, of course. One is going to be the management's commentary on the shift in the growth strategy given that liquidity crunch and funding situation, and secondly a very close look at the asset quality trends in the corporate and the LAP segments. Those are the two most important things that we are likely to watch out for, Devina.
All right, Shraddha, thanks very much for that. That's Indiabulls Housing Finance numbers and the expectations thereof. We want to take a few queries that are coming in from our viewers, and I'll start off with the Balrampur Chini. Hemen, do you have a view on this one?
Oh, yes, despite the high risk nature of the sector, standalone Balrampur Chini looks good, but 65 to 103 is too sharp, too fast. Logic says I'd be comfortable buying at 91. There's a question of shorting the stock, without a doubt. I'd wait for a decline to go long, frankly speaking.
Okay, wait for a decline. To what levels, but?
89 or so.
89. Okay, it's currently at 101. The other query is coming in on Tata Motors. Sumeet, you have a view on Tata Motors and if there's a trade possible here?
See, Tata Motors is making new lows every day. It's better to avoid the counter till the time we don't see any convincing move. We should see some convincing move in next couple of days or so, because last 3-4 days back stock has made a low of around 169, 170. That can be the short-term bottom if the stock is able to break 200 levels on higher side, and that too on closing basis with volumes. If that is seen, then there is a possibility that we might see a good move till 240 or 250 levels in short term. In short term means in next 1 to 2 months time horizon. But at present we have not seen any breakouts or any signals of any buy signals on charts. So it's better to avoid long positions at present levels. Let the stock give some upside move. Let the stock break 200 levels on closing basis. Once the stock is able to break the levels, then we will see a move of around 40 to 50 points on higher side. So it's better to buy above the resistance levels. At present, it's better to avoid.
Okay, that's Tata Motors at 184. The stock has actually come off sharply and one of the worst performers in the auto pack. Mid-cap IT, Dharmesh, what's the sense here in terms of what the earnings this season would look like for mid-cap IT? And if you specifically have a call on a stock like Persistent Systems or 3i Infotech?
See, the entire basket will report a good set of numbers because of the two factors, especially in the mid-cap space. Their domestic business has been doing fairly well, and digitization has picked up in a big way with the domestic corporates, and that is where they are gaining traction because of the pricing they have on their product, which gives them a relief to the local companies. So that segment is taken care of. As far as the overseas business is concerned, currency is a beneficiary out there. But the valuations at which they have been trading now, in spite of some correction which we have seen, is still far too expensive. And I do think it's not a time where you can, make consistent form of money by investing in these stocks. So numbers will come good, almost 15-16% kind of profitability growth you will see in most of these companies. But sustainability of the stock prices, given the valuations at which they are trading, is a suspect. So we are not recommending our clients to enter into any of the mid-cap IT stocks. Even for that matter, even large caps, we suggested to book profits a week back, and that is the stand we maintain.
Okay, in moments from now, we'll get you what dealing rooms are recommending in the session today as well. Reddy's is now giving company to Lupin as amongst the best performing stocks. But what's done very impressively well, what's done very well today and is showing an impressive move is Infosys. Ahead of the numbers, that stock is up about 3.5%. Now remember, all, not really all, but TCS at least approached its own earnings with a fair bit of a damp squib kind of a movement. But Infosys, on the other hand, is approaching its earnings with some gusto, 3.5% higher, 701. Hemen, have we spoken to you about Infosys?
No, I think it's a dead cat bounce. We walked into an intermediate correction. It would be very surprising if it shrugs this correction off and starts knocking the earlier high and starts moving up. So I have a feeling we were off from 755 to 663 needed. That's almost 90 points or so. We are seeing a recovery. Maybe this recovery, add some more value. We are at 699, maybe 710, 715, 720 is possible. But I clearly think that this is a recovery and not a rally.
Okay, that's Infosys at 700 right now. More of a dead cat bounce according to Hemen. Well, it's time now to take a look at what dealing rooms are recommending. Yatin Mota, he's here with his channel checks. Yatin, what's the word this afternoon?
Thanks for that, Devina. Of course, today is probably a slow day. So the dealing rooms exactly have not been able to create very large positions. In fact, they are still sitting on the sidelines looking for the markets to stabilize. But in specific recommendations, IndusInd Bank dealers do recommend, buying at lower levels, given the fact that there is a lot of institutional buying which is happening at lower levels. And in fact, if you look at the earnings, and if you were to adjust that IL&FS or a probable, infrastructure, one-time provisioning, which analysts do believe is relating to IL&FS group, then the earnings are slightly above expectations. Apart from that, granules, and today is probably a pharma day. If you look at the large cap, mid cap pharma names, all of them are buzzing in trade. Dealers on the basis of FNO trends also recommend a BTST kind of a strategy as far as granule in India is concerned. And finally, Trident locked in upper circuit. They have reported a profit of almost 100 crores for the quarter, market cap close to 3,300, 3,400 crores. And dealers on the basis of valuations do believe that second quarter earnings, the kind of profitability the company has delivered, probably a lot of HNI interest is still pending in the stock.
All right, Yatin, thanks a lot for that. So Trident comes up in quite a few lists out there on the back of its numbers. Anything else, Dharmesh, that you're particularly interested in, from a risk-reward point of view on the valuation side, and that poses a favorable entry point right now? Dharmesh?
Oh, yeah. Yeah, there are a couple of, stock trading, ideas which do interest me. One is the Bharat Electronics. So after a, very big correction from 110, 120 kind of a levels, the stock corrected to sub-80s. And the business remains the same. Nothing has changed on the business front, except that the announcement by the government where they would be lowering their margins. But that will be effective from 2021, and in between there are certain advantages which have been given to them, be it on the method of depreciation and the cost escalation which has been built into. So effectively it would be hardly a 100 and 150 basis point kind of impact which will there. But from here till 2020 there won't be any business impact. So I think the stock was severely beaten down. Irrespective of the strong fundamental stance on, and valuation wise it's a very good value buy at current level. So that is one idea which interests me a lot, and given the type of environment we are, it stands insulated from most of those impact. Apart from that, in the private sector banking space, RBL Bank looks pretty good to me. The numbers would come really strong, and that we have seen in the case of all the banks which have reported their numbers so far. Beta, Bandhan Bank, even IndusInd Bank numbers were very good on the operational front. It's because of the provisioning that profitability is taken a hit. Karnataka Bank numbers were also in line, in AU small banks. So all these 4-5, what the trajectory which they have been showing is strong, and I do believe RBL will post around 30-35% kind of profitability growth and advances growth. So that trajectory continues. So that is one stock which one should be looking into. And in metal space, SAIL has, Steel Authority of India has seen a turnaround for last 3 quarters, which is likely to continue going forward. So it's trading at 30% discount to its book value based on FY18 valuation. So that's again a good attractive buy to me. So there are plenty of ideas, stock specific, which looks attractive to me.
Okay. Stay on, Dharmesh, so much more to talk about, but time now to get in closing strategies. By the way, as we speak, Lupin is revving up even more, 5.5% higher in trade. But top closing strategies from our experts. To you first, Hemen, your top closing strategy.
BTST on Aurobindo Pharma.
BTST on Aurobindo Pharma, 2% target, 1% stop loss?
Yes.
I'm now getting used to Hemen's ideas, but or at least his target prices, but 2% higher is the target. This is for tomorrow, and a stop loss of 1% lower. Sumeet, what about you? Your top closing strategy?
Well, Motherson Sumi is looking good to me. One can initiate long positions in Motherson Sumi at the current market price, with a stop loss to be placed at 242 levels on lower side for the upside target of 265 and 275 in the next couple of days. We feel that Motherson Sumi can give a very good upside move from present levels. Counter is looking oversold on charts, and today it has shown a very smart recovery from low levels. So one can initiate long positions for the targets of 265 and 275 levels.
Motherson Sumi, Dharmesh, any thoughts here? We spoke to the management and they reiterated their targets of return on capital employed about 40% for the consolidated entity, FY20, new plan to generate large chunks of revenue. The stock has taken a bit of a beating as well. Does all of this make it a reasonably attractive bet, or would you shy away?
I did not get the name of the company.
Motherson Sumi, Dharmesh.
Yeah. See, auto ancillary was always, a preferred space for a couple of years back, but how the things have turned around in spite of currency depreciation. US business has always been into an area of suspect, and Motherson Sumi particularly was hit by, first it was a Volkswagen fiasco which, undone them. And then again, some of the policy protection measures which have been taken by the US government and which is continuing there has hit the businesses. So management has always sounded confident. They have always been reiterating their stand on the business position. But I do still feel that it's not the right time to enter into the, auto ancillary companies which have a heavy dependence on the US exposure. So it's better to wait and watch and see how the things pan out before getting into it. To my mind, if you compare Bharat Forge with Motherson Sumi, I would prefer Bharat Forge rather than a Motherson Sumi as a auto ancillary pick.
Interesting. Okay. By the way, what's also doing really well for itself is Jet Airways. I think it's spiked up in the last half an hour of trade. Look at that up move, 3% higher, 207. I think the others might also be doing well. Maybe the Interglobe Aviation too could be trading well. But Jet Airways certainly a bit of a spike in the last few minutes of trade. Indigo too about 2% higher. Good going out here. Before we get the chart check going, Dharmesh, and I'll thank you after this, but aviation as a space, are you dabbling in it?
Yeah, Neeraj, if you remember from December, November last year, I have been saying this is a biggest selling opportunity which is coming around the way, and see what the numbers they have reported because of the pickup in the fuel prices which we have seen. And nothing has changed. Even today the currency is depreciating, INR is depreciating, and 2-3% correction in the crude prices does not make aviation attractive buy. I think lot of bleeding is pending. And the way global scenario is panning out and the noises and voices which we are hearing, I won't be surprised if Brent goes above 1995. So then 2 quarters of complete bleeding which we will see in Jet Airways. So this is just trading blip which we are seeing as of now. It's a complete avoid to me. And 2 quarters of bleeding if it happens, so it will be operational problem for companies like Jet Airways. So you very likely you can see 120, 100 rupees kind of a price on Jet Airways. So it's a clear avoid or a short to me.
Okay, Dharmesh, we'll leave it at that. Many thanks for joining in today and giving us your perspective. Really appreciate your time.
Thank you so much.
How about the charts, Hemen? Jet Airways?
Oversold, looks good. Dead cat bounce, but the bounce is not yet over. We're correcting a fall from 880 to 160, Neeraj. I think further upside seems like a cinch.
So should pull up the.
Now this is one thing. So you would not go out and buy a jet or an Indigo?
Yeah, I'd buy a jet. Yeah, and to make it safer, I'd even sell the out of the money put. We are at 200. I'd sell the 180 put. I think that seems like a safe thing. Assumption is that 180 is liquid.
Okay. Adani Power should pull that one up and pull up the last 7 days performance of Adani Power as well. That's 35 right now, it's up 7.5%. Last 7 days has seen a 43% increment in prices. Sumeet, anything on Adani Power?
Well, it has given a very smart move from lower levels. In last 5 to 6 days time horizon, we have seen that the stock has moved up by almost 10 to 11 rupees from lower levels. Now, immediately the stock has resistance at around 36 levels. Once the stock is able to break 36 on closing basis, then we can see a move till 40, or even there is a possibility that we might see an extended move till 42 levels. I think immediately it's trading near resistance level, so it's better to avoid fresh long positions at the current market price. But those who have taken long positions at lower levels, they can hold on the existing long positions with the trailing stop losses to be placed at around 32.50 levels. 32.50 should be the trailing stop loss for the upside target of 38 and 40 levels.
Okay, as we speak, it's a good rebound for the indices. The bank Nifty has also moved into the green now. Nifty is up almost 0.5%. Just quickly looking at the kind of contributors that are coming in. Should actually have the Nifty contributors on your screens as well to see where much of the gains are coming in from. So it's Pharma and IT leading all the way, and HDFC Bank, which is closer to about 15 odd points in terms of contributing, a heavyweight on the index. ITC and Reliance Industries obviously having the 9.5% weightage. Infosys is up about 12 odd points. Amongst the losers, HUL has a dull day, and so does L&T, M&M and ICICI Bank, which contribute closer to a 50 odd point nudge down on the Nifty. A few other names I think should pull up a Gujarat Gas and see what that stock's doing. I believe there is some amount of activity on that counter. The stock shot up 15% in the last few minutes of trade. So at 7:07 now, there's been a flurry of activity with a pickup in volumes as well. Quickly, Hemen, Gujarat Gas?
Oh, nothing technically has any logic for what happened. Like you said, flurry, hectic activity. Further upside possible, too liquid. I wouldn't have a clear view on the stock.
All right, that's Gujarat Gas.
Okay, Hemen, stay on. We'll take in closing thoughts from you, but here's how the markets are shutting shop today. About 0.5% for the Nifty and the Sensex, which is not bad because we didn't, nowhere through the trade did we ever anticipate that we'll close this high in the green. It was promising to be a flat day, as it is for the Nifty Bank, by the way, which is also shutting in the green. It was at a point of time about 0.7 or 0.8% in the red. So that talks about how the recovery has been. The broader market, the market was anyways positive throughout the day, which is why 1.5% uptick for the small cap index, 1% uptick for the mid cap index. So there, the indices haven't done all that poorly. The BSE 500 up about 0.5% as well. What about specific pockets? Let me talk about the large caps, and Devin, I'll bring you up to speed with what's happening at the mid cap and the small cap end of the market. The large caps first. Pharma all the way. Lupin, Dr. Reddy, Cipla, some strong moves there. Gains for an Infosys ahead of its numbers tomorrow, doing okay. Hindalco amongst names which is doing okay. ITC and TCS from amongst the heavyweights, which have also not done too poorly. What's not done well, and few and far in between. Finserv, HPCL in particular, but Finserv and then the auto names. So you'll see a Mahindra & Mahindra, you'll see an Eicher here, Maruti down below. All of these auto names have somehow come off from the levels that they were trading at on Friday. Friday, they had a big day in the green. Today, a bit of profit booking that is coming in to the auto pack. What about the broader end of the spectrum, Devina?
Well, that seems to be still more excited than what the benchmark indices are, and specific pockets from the broader market seem to be holding on to significant gains. And specific to that, I'll highlight a few counters that are looking promising. A stock like Trident and TV18, two stocks on the back of results that have really excited the markets. Trident with 19% gains, TV18 also double-digit gains, closer to 14.5%. You've got a stock like Aptech, HCL Infosystems, Emphasis. These are three stocks, particularly from the mid-cap IT basket, which have shown you good gains. From the start of the trading session, it was promising, but towards the end, you picked it up a bit. Den Networks, double-digit gains coming in there. Ravanti Feeds looked strong in intraday trade. And from the sugar basket, you have a Bajaj Hindustan and a Balrampur Chini closer to 8.5% to 10% gains that you're seeing in some of these names. Adani Power is the other one that saw some interest in trade, and a last-minute mover, which is Gujarat Gas, should pull that up as well, because closer to 15% is what you saw that counter moving in intraday trade. Amongst the losers, Avenue Supermart on the back of disappointing numbers, particularly that margin squeeze, stock down about 6%. Shree Infra is the other one that lost out. Jyoti Labs, Divan Housing Finance, and a few other names from the consumption space. You have a Dabur, which lost steam in today's session. IRB Infra and Island FS Transport yet again stacking up in the losers list. But all in all, we probably look at a stronger close. A dull day in terms of the overall volatility was a range of 1% within which the index actually moved.
Yeah, I want to see the volumes, Devina, and let's see how they have ended today, because it was a low volume day as well, and clearly on the lower side. The cash volumes too at 27,000 crores is a lot lower than what you usually see happening on the NSE cash these days.
Off late, actually, we started seeing 38,000 being a normal figure for NSE cash, and even for BSE cash, actually, you're looking at numbers of 3,300, 3,400, and in today's session, closer to about 2,300. Though F&O seems to be pretty much in line.
Yeah, well, NSE F&O definitely has picked up in the second half of trade. The contributors in the market, where we highlighted the market breadth, it is positive because the broader markets have actually stayed positive throughout the trading day today. So no surprises here. We've ended about 1:2 in favor of the advances, but the turnover, interesting. I think we're just marking it sometime back as well. But heavyweights really dotting the screen on the gaining side. So it is, I mean, if you have heavyweights performing in the green, and usually there is a bit of a support to the markets.
Yeah, there's few stocks there, and be it an HDFC Bank or a Reliance Industries, they do hold like a heavy, 7 to 9% weightage. So that kind of uplifts the index in any case. So 98 points higher versus 55 points on the dip. But should pull up actually the MRR function for the small cap and the mid cap space as well, because today's session was the broader market outperformance versus the index. So it would be good to have an overview of which stocks actually did what they did. So this is, I think, the mid cap space, and you had a strong performance from TV18 that was on the back of numbers. Emphasis did well. Adani Power, last minute surge that you saw in that stock. Natco Pharma through the day did well. And Vakrangi, interestingly, this stock continues to outdo itself. So on a daily basis, since the last 5 or 6 trading sessions, Vakrangi has actually ended in the green.
Oh, it skipped my notice, but interesting moves there. But Natco Pharma clearly stood out for me, and to an extent, Emphasis 8% higher. After that fall off the cliff the last few days, it's somehow bouncing back in the session today. I think the record date for the buyback is on the 25th of October, 10 days from now. So some gains out there. Can we get the small cap index as well if we can? And let's just see what's happened there. Maybe some sugar names would feature in the small cap index.
Well, most of them did, what they did. Balrampur,
Balrampur at least. Then some of the others might not be a part of the index, but they've certainly done very well for themselves.
Trident there, stacking at the top.
And the fertilizer names, somehow we missed those today, but Chambal, National Fertilizers, RCF, that whole pack has had a fabulous move in the session today. Well, interesting. Final thoughts from our experts then. Sumeet, the pocket that we missed marking on earlier in the day, aside of sugar, fertilizer as a pack has had an extremely buoyant day. What do you see on the charts here for some of the names?
Well, as far as view on market is concerned, we hold the same view which we gave when we joined Bloomberg Quint at 2:30. We gave a buy view for the targets of 10,600 and 10,650 levels. Now, looking at the closing, it seems that the levels can be achieved in next 1 or 2 days. So it's better to be on buy side. Any dip from present level should be used as buying opportunity. And on higher side, we can see levels of around 10,600, 10,650 as an immediate target. There is a possibility that this move can continue till 10,700 levels also. So overall, this week looks good to me.
All right, a good week according to Sumeet. Hemen, do we anticipate a bigger upside?
I think so, Devina. Things are set for a further recovery. A bounce nevertheless, but a decent bounce. Bank Nifty leads, looks good. I think maybe there could be a little bit of volatility left because the VIX is being stubborn, continues to remain around 18.9, needs to come below 17. But yeah, all in all, I think it's a buy and declines market. Way too many stocks are giving bounces. Auto had an off day today. A couple of days later, autos are going to stage a strong comeback. Looks good. I think we're looking at a further upside.
Okay, got that. Thanks, Hemen, as well as Sumeet. Appreciate both of you taking out the time and joining us with your views.
Well, with that, it's a wrap on this leg of Countdown from Devina and me and the team that put the show together. Thank you so much for watching. Where is the party, Devina, tonight?
You tell me. It's my birthday. You're supposed to give me the party instead of me giving you a party.
Okay, we'll figure that out for sure. But anyways, viewers, thanks so much for tuning in today.
Good news, got a promotion and a damn good raise.
Congrats, beta.
वाह, raise? अब तो insurance policy ले ले.
कौन सी कंपनी से लूं?
Choose वही जिस पर हो पूरा भरोसा.
That's good. But आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC. Trending with times. 62 सालों से हर generation की पसंद.